at the S&P 500 as we get ready to trade Friday, October 1st, the start of Q4 2021. Starting off with a look at the monthly chart, here is the way it went. We finally got a full-on red candle for the month, the first time since we've had a red candle since January. Nothing but green in the middle of the sandwich here. Closing nearly on the low for the month, so kind of a nasty little move towards the end of the day on Thursday. Here is the intraday chart. You can see here's where we opened up and just kind of fell over. Tried to recover. We lost the 100-day simple moving average around here, around 11:30 Eastern time. And you can see we tried to recover it in the afternoon, and then there was just this spill over into the close just to end the month and really just get rid of everything. Everybody getting everything off their plate. We did just barely hold above the existing September low, the one that was set back on the 20th. This low at the end of the day got down to 43.0653, and our low for the month of September was 43.0591. So we just kind of held that together and wound up closing out the month at 43.0754. So here is our roadmap. If we were to start off strong with a bang going into our first trading day of the new quarter and the new month, we're obviously looking to just get back above this 100-day simple moving average. You can see that the day more than doubled down on loss of that. This is a rising line. It closed at 43.44 on Wednesday. It was about 43.43. It's rising like about a point, maybe a little over a point a day. So it's going to be 43.45 to 46 to try and recapture that. That's so close to the 43.50 handle and kicking in that whole 80 handle rule phenomenon. So just be looking for that. If we're going to get a bounce tomorrow, we got to get above 43.50. That means we're above the 100-day and we're above that 43.50 level. And then we got to get on back up here over the high that we made on Thursday, over the high that we made on Wednesday, and retake our 10-day simple moving average. It's a falling line that's going to actually be below the highs from these last 2 days. So that would be what would need to happen. What's going on overhead right now is that we have a bearish cross of some longer term simple moving averages. We got the 20-day crossing down through the 50-day. Now the market's either going to see this as an incredibly oversold signal and pull off a really big strong rally tomorrow and maybe into Monday and early next week, or it's going to act on this as the sell signal that it actually is, and we're going to just break down below these levels that we have traded in September at 43.05. So what comes next if we break down below 43.05? We've talked about this many times. 42.75 is a 6% correction off the all-time high. The biggest correction we've made for the entire year 2021 so far has been a 6% correction that happened back from mid-February to early March. So if we're going to break down lower, we're going to see if we hold this 42.75. If we don't hold 42.75, there are some other things along the pathway here, but ultimately we might be looking for a move all the way back down to the 200-day simple moving average, which right now is crossing just above the 10% mark on the year, and it's rising towards the June low. If we were to continue to sell off tomorrow and into early next week, maybe over the course of a couple of days, we would topple our way on down here, and this 200-day simple moving average would be a little closer to where this June low is, with June being sort of like the midpoint of the year. Maybe that's like where the market wants to go back to, sort of like taking back half of the range on the year that we've made so far. I mean, this is the halfway back for the year, all the way down here at 41.04. But in terms of time, as far as that goes, it would be getting back, taking back 6 months of work on the market and getting back here. Maybe this would be a real good buy point. So let's review one more time. 4,300 to 43.05. This is where the line in the sand is. If it breaks, maybe we're just going to take a little look below it and go to about 42.75. And if 42.75 breaks, yeah, we could just test and hold the July low. Yeah, we could just test and hold the June low, but ultimately we're probably going to be aiming towards the 200-day simple moving average. If it takes a couple of days to get down here, that's going to be rising up and be very close to that June low, and maybe that is what's going to satisfy the beast and get this market to turn back around. As far as the options go, it's getting too late now to trade the October 1st because that's tomorrow. We don't trade same day stuff. We got to go out to next week, so we'd be looking at the 8th. As far as the options go on the 8th, you got to go all the way down to 4,200 here to see where this volume is sticking out, and those are still going to be 22 bucks. So you think of those in terms of half size position of what you would usually buy at the $11 window. If all you buy at the $11 window is one option, which is perfectly understandable, then this isn't for you. Maybe we get a little bounce instead up to the 100-day simple moving average that totally fails and we roll over again. Maybe that would take these down to the $11 window, and that would be your entry there. If we come in flat to slightly higher, you can see the volume standing out all the way up here at the 4,400s, the 4,400 calls. Now those were above the $11 window on the close, but maybe with some time decay, if all we had was a very flat to only slightly up open tomorrow, these would be in the $11 window. The next volume leader up from there, you know, and you can see the price here, are the 44.25s. But I would stay, you know, I would not go any further out of the money than about 44.25. There's really no reason to. We've sold off so much. There's no reason to be buying 4,500s and stuff like that. You're not looking for a 100-point move in the S&P. And if you are looking for a 100-point move in the S&P, why not be in something that's going to go in the money? You know, that's going to go way in the money, like these 4,400 puts that I had been recommending last weekend and on Monday of this week, and those went to like 68 bucks the next day. So that's the kind of move you're looking for. Anyway, hope that all makes sense. Hope this video helped you out and gave you a better understanding of where we're going tomorrow. Have a great night, and as always, good luck and good trading.